Well, hello folks, I'm LA Little and this is your daily NeoTA wrap, where we take a look at these markets. We do it from a neoclassical perspective. That means each day we ask ourselves what happened today, and we use that information to tell us what's going to happen the next few days. You can do that on a weekly basis, a monthly basis, a daily basis, intraday basis. It works the same. It's neoclassical. It's 60 bars to a chart. Same algorithms, the same concepts across all those charts. Do this show 4 times a week, as I said. Broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. As far as what happened today, we had another down day. 3 in a row now, and this market just can't get off the floor, and the big mover today was Apple. Apple starts to break down, and down 4% at one point. That kept the NDX under pressure all day long, and also the Dow, because Apple now, through the wisdom of the Dow index indexer, they put Apple in there, so now Apple of course weights against that index when it's going down. As far as everything else, commodities got a little bounce across the board, but nothing big. The big thing today was the dollar pushed higher one more time. If we walk over to look at the indexes, what we're going to see is inside days. We're going to see it across all the indexes. Each one of them is going to have the same thing. You do an inside day, so you don't really release any information. You had a little bit more volume here, but still, everything that we talked about last night is the same tonight. Really, no change. NASDAQ, same thing. Inside day, a little bit more volume. NDX, same thing, not a change. And the Russell, also the same thing. Matter of fact, not the FTSE, I was going to do the Russell. Let me pull up the Russell. And here's the Russell. So same thing here, right? So you get a little bit more volume, but inside days really don't tell you much of anything. Now if I move over to Europe, look at the CACs, also an inside day. Goes inside, gets a little bit more volume, but doesn't get over the top, doesn't get over the bottom. Now the one that did show something, and I didn't see it earlier in the day, and I was asked about it actually in the trading room today, but when I looked at the price points then, it looked to me like it was an inside day as well, but it wasn't. And not an inside day, but I thought I had a little bit more volume. So anyway, we end up with a little less volume. We go over, we actually closed slightly under, and that was the thing that I thought was different. 11,460, and we got 11,456 on the close, so a slightly lower close, less volume. That's an over-under. It's not 2 bars, you haven't jumped that much, so you kind of have a divergence here between the two, where the CACs is, inside days isn't telling you anything, but the German DAX actually says, hey, we could get some sort of a sideways day or a pullback. If we move over to Asia and look at Hong Kong, Shanghai. Shanghai trades higher last night, Hong Kong can't move. I think this one ended up inside too. Let me see, 24.53 it did on the top side, 32, no, it was underneath on the bottom side. So really nothing there. Still treading water, still playing with this big bar trying to get inside of it. If we look at the Shanghai index and see what happened to it, you actually had the little 2 dojis. You got the bounce up, still no volumes. It's like the big players have walked away from this market. And I talked about this about a week and a half ago and said, it's very hard to trust what you're seeing there. And I think that people that are playing this both on a technical perspective, any kind of arbitrage perspective, and also on fundamentals are having a hard time trading this market right here. And you're seeing the volumes shrink as a result. Last 3 days on the Nikkei, seen a lot of volume, or actually the last 4 days, but we're not seeing any kind of push up as part of that, which is kind of interesting. And as a matter of fact, that's a good segue over into the currencies, because if we pop over to take a look at the currencies and zero in on the yen, you would think that the Japanese market would try to be pushing higher, given that the yen is down here trying to break out the lows. Speaking of currencies, let's look at Euro next. We haven't looked at this chart in a while. This one's coming down towards the bottom. It's going to try to break out these swing point lows at the bottom. There's 2 of them down here, and if it does it, right, then you're going to try to go after these lows, in particular this low back here from March 16th. Talking about bonds, they look like equities in that they had an inside day as well. Didn't give us much information. And if we go look at some of those commodities, and oil in particular, even though it got that nice bounce today, up, what, 0.75%, that's after a big down day, big volume on the down day, and it ends up being an inside day. So again, that really doesn't change anything about the bond picture. Excuse me, the oil picture. Here's the silver market, can't move. If we look at the gold market, it can't move. We're not really getting any kind of traction anywhere. And if you look at those gold stocks, they just keep drifting lower, and that's after a huge sell-off from 21 to 13. So basically about $7 has been taken off 21. If you do the math, that's about 33% in 60 bars. That's a pretty good chunk of money on the way down. So what do we got here as we look at this tonight? Well, we got a mixed picture, and the mixed picture is that if there's anything that these markets are telling us, is that they are going to try to hold them here for some reason, right? They're going to try to hold them because they just don't want to give it up. Every time you see the sellers try to push this thing down, there's a bid up underneath the market. The only signal you got tonight was from the DAX, and that signal isn't all that valuable. It's just an over-under. I want to take a viewer question, and it has to do with what I talked about on Sunday night. We were talking about the 45-degree angles, right, being a nice angle of ascent and descent. And if we do a 45-degree angle, for example, here, right, and I'm just taking the GDX. If you do a 45-degree angle, this has held to a 45-degree angle. Yeah, you got a steep angle here, but what happens when you get those kind of moves? Well, then you level back out to something that's a little more sustainable. And up here it wasn't quite as steep. You get the big steep drop. Now you're back and you kind of got a 45-degree angle going. Question is, you know, what is it about 45 degrees that you know, anybody should look at and think that it has some value? In the comments as they read said, you know, a 45-degree angle of the weak sectors have to come back eventually. And it says, as we know, as far as individual stocks go, there's just no limit as to how low they can go. You know, many stocks that were 100 now are trading at $1.05, and then in the 60s and 70s market, it went sideways for, I believe, 14 years in a 10% range. So, you know, the point is that you're not, you know, this 45 degrees. Why do I make that assumption? Well, if you look at enough charts, you're going to see, you know, this whole ideal of regression to the mean. And if you take, and I'll just pull up, let me pull up the S&P. Actually, let me go get a long-term chart just to exemplify this. And I'll put the Dow Jones up. And so here we go. Here's the Dow Jones. I've put it all the way back to, the beginning of time, right? Turn of the century. And this is back in 1900. So from 1900 forward, right, if we look at this, you know, what kind of an angle of ascent do we have? Now, there's going to be periods where you get angles of ascent that are way over what they should be. And you have periods where there's, you know, degrees of movement that are not 45 degrees. But if you look at the regression to the mean and you put the mean up here and you do it, what are you going to end up with? About 45 degrees. And you're going to see that on chart after chart after chart. It's just the way it is. And even on a descent, you'll see it the same way. That's a maintainable angle, a degree angle. You know, when you're physically looking, you know, visually at a chart, 45 degrees tends to be the magic, you know, angle that a chart can sustain over a period of time. And over a period of time, they will regress to that mean. Now, there's going to be periods where they're going to go above it, they're going to go below it, they're going to have steep angles of, you know, like the 1990s, right, where you have a huge angle of degree higher, and then you get the big one down, and then another one up, and then another big one down. But overall, if you take a long enough view, that's what you're going to get. And even if you narrow this in, you know, if we pull this in and say, you know, let's do, you know, 10 years. Even in 10 years, you're going to see the same sort of thing. Right? You're going to see some sort of, you know, the mean here. If we take this and put the mean in, the mean's going to be somewhere in there. Well, it's almost 45 degrees. You know, it's not, you're not going to see, and, you know, whether it's 45 degrees or 40, that's irrelevant. The point is you're not going to see these angles of ascent or these angles of descent last for that long. You know, and when we're talking 6 months, a year, yeah, it's possible on a long-term chart they can do that, but over a long period of time, if you're looking on the monthly charts, you're going to see them narrow back down to something that resembles about 45 degrees. And so that was the point. And let me see if there's anything else to this question. Yeah, I think that was the gist of it. So that's hopefully that's the answer, and it's really it all has to do with the regression to the mean and the fact that you have inflation, right? Inflation always pushes averages up. You also have one other factor that's always pushing the average up, and that is that they always call the worst stocks. They go away, and so the averages always look better than your portfolio because the averages themselves are fully invested all the time. And the averages necessarily get rid of anything that doesn't do well. They call it out. They get rid of it. Okay, well, that's that question. Hopefully I answered it well enough, and I think that's going to be it for tonight. As far as the rest of the week, as far as tomorrow, you know, the big thing out here right now is Apple. Apple Inc. is broken down, and Apple's a huge weighting in every index. It's the largest weighting in each of the indexes. And so when you get a stock like that, you know, weighting that heavily, and I shouldn't say all of them because on the Dow Jones it's not, but when you have a stock like that that has that much weighting across almost all the indexes, dropping 4% in a day, dropping, you know, what is it, about 14% now or 13% in the last 2.5, 3 weeks, that is going to keep the indexes hand tied. It's not going to let them, you know, get higher. And until that changes, until Apple settles into another trend, then you're probably going to see this continue. That's it for tonight. Have yourself a great one. I'll see you.